My name is Mark Moss, and I make these videos to change the way you think about money because almost everything you have learned is wrong. So the question that I have, and of course, this inflation, deflation is such a nuanced argument, right? So like, for example, yesterday, I don't know if I'm sure you saw somebody from the White House was talking about how if we just remove meat from CPI, we don't have inflation. I mean, that was the most ludicrous thing I've ever seen. But if we look at this, inflation, deflation, and so if they are reactionary, even if they're trying to preemptively move, which is still reactionary, I guess the question is then, do we think they have enough firepower to overcome the deflationary forces? Or will they wait, I guess, and maybe run out of ammo?
Well, so I think that you hear a lot of this, the Fed is running out of bullets. They don't have any more tools. Interest rates are at zero. And I think that's wrong. I think that central banks have a lot more firepower. They can take rates massively negative. They could ban cash or whatever. I think there's a lot of things that they could do. But again, I think that would be reaction. Their extreme reactions would be in reaction to extreme events or externalities, right? And so, and I think, if you've ever listened to people like Lacey Hunt or Jeff Snyder or Steve Van Meter, I think, I don't want to speak for them, but my impression of what they're saying is it's not that we won't have short-term inflationary pressures. It's not that prices won't rise. It's just that if it's allowed to play out, the debt is so big, the debt will eventually crash the entire economy and all prices will fall. And then, and again, I'm not speaking for them, but I think that's the point they're making. And for the Fed or the central banks or the monetary authorities to overcome that, they need to not just do what they've been doing, but they actually have to take more steps than are legally allowed to take. Now, it doesn't mean that they won't eventually do it.
Right.
And I think that they will eventually do it. My point in this whole debate has been not that we haven't seen inflation. I think it would be very hard to look over the last year and say prices haven't risen, right? It doesn't take a PhD in economics. Well, maybe a PhD in economics actually might keep you from seeing the prices rise.
Right.
All you got to do is walk out and talk to somebody on Main Street, prices are rising. My argument has been that it will not continue at the same pace unless they do something differently and do
Interesting.
it. And so if these things aren't changed, we will eventually, and whether it's 6 days from now or 6 months from now or next year, I don't know, but we will have another rollover. It's just like, look from 2015 to 2018, markets went up. And then in December of 2018, crash, right? And then they went up again and crash. And, the deflationary periods are very short because they're so severe. And then you have the central bank come and bail it out, right? And the inflationary periods are longer because the central bank is there. They're pushing and they're supporting. But it's like the stair step up and the elevator down, right? And I think, again, the point I make is that if something doesn't change and if they don't do additional steps to what they've already done, not just more of what they've already done, but actually different steps than what they've done, we will have that elevator shaft down again. And again, I wish I had an indicator that told me exactly when that was going to happen.
I know, right?
But I don't.
Where's the crystal ball?
Yeah.
Your clients would like that a lot better too.
They sure would. I think the point I just want to make is the people who say they're never going to quit and it will eventually end at high levels of inflation. I don't necessarily disagree with that.
Okay.
I guess my point is I think for them to be politically able to take the steps that are necessary to take to get this really huge asymmetric hyperinflationary move that everybody's been expecting for 40 years or 50 years since we went off the gold standard, some changes have to be made. And those haven't been made yet. Now, I'm not saying they won't be made.
Right.
But I think they can only make those moves in some kind of an extreme circumstance.
Yeah.
And so if you get another big hard sell-off, if you get another COVID panic, think about it. Last March, markets were more oversold last March than they were at any time, I think, in history. Certainly more than in 2008. And I was in the middle of it in 2008. Well, that was a pretty crazy time. But I had never seen markets more oversold than last March. And that allowed them to come out and do all of these, programs that they did. And,
Right.
We've seen it again. So there was an extreme market event. They came out and did an extreme reaction. So we've seen this extreme, market reaction to their extreme actions. But I think it would take another extreme market event to allow them to do what they do, to do what they would be necessary to do to keep it going at this rate.
Yeah.
And you're already starting to see pushback on this. The senator from West Virginia, Manchin, he's already said he's not going to vote for the whole infrastructure bill. Of course, the Republicans aren't going to do it. They want to do it, but for political reasons, they have to push back initially. But if we get a 10 or 20% market correction in the next couple of months, that'll allow them to redo it. Do you know what I mean? But I think it'd be tough for them to just come out now with inflation pressures the way they already are and just, introduce a new $5 trillion package or whatever it is.